There we go. All right. First off, has anyone had any experience in a reverse mortgage, or do you have any idea at all what it even is?
No.
Anybody? I think probably not. Um, the reason that we're having this conversation now is because things have just shifted in our market a ton. We have a ton of people who right now are sitting on this great asset where they have all of their equity, but they have no ability to access that easily because interest rates have gone up. For years and years, the Fed fund rate was at pretty much zero. And so you could take out a HELOC, a second mortgage, any of these options, and it costs you almost nothing to borrow against your home. That's not the case now. Right now, we're seeing interest rates on second and HELOCs to be closer to almost 10% or greater. And that's if you qualify for them. And so this is becoming a better option for those people who they're sitting on a lot of money in their home or even just some equity in their home, and the kind of monthly expenses are starting to build up on them and they can't keep up with them. As we know, we've been hearing it everywhere, inflation's high. I always like to talk about the cost of strawberries. Sometimes I go to Lund's, I buy these organic strawberries, they're $8.99, and I count how many strawberries are actually in my container and realize there's probably 3 that are bad, and now I've paid almost 85 cents for each individual strawberry, which seems insane. That is inflation at its finest. And most everyone on this call is younger. If you're not younger and you're living on a fixed income and there's no ability for your income to go up, something like inflation hits you really, really hard. And so thinking of your parents, your grandparents, your clients' parents or grandparents, that's who this is going to be the best resource for, is those who have been living on fixed income and inflation is hitting them. They went through some cash things, the market hit them really hard, and now that retirement that they planned on maybe just isn't quite there. Also, one interesting thing is people always assume that if you're retired, you're sitting on tons of assets. That's not the case. Some people become retired because they physically can't work anymore, but they don't actually have enough money to last them the rest of their life without using a product like this, and they might not even know it exists. So that is why I thought it was important to go through this today. Right now, I think the statistic is there's about $28 trillion of equity across with homeowners across the United States. And so how do people tap into it? What does that look like? Knowing that most of the people with this equity are retired people living in their homes that they've been in for, maybe 50 years. If you don't know right off the bat, a reverse mortgage is literally a mortgage that you can take out on a purchase or a refinance transaction, and the bank is going to give you money every single month. You are never going to make a payment on it unless you choose to do so, and the bank is literally going to give you deposited money every single month. So with a reverse mortgage, you need to be 62 years or older. Some products allow for one of the spouses to be 62 or older. Some you both need to be 62 or older. It depends on the investor and the product. There are different options. The older you are, the more you're going to be able to tap into from the home. If anyone as we're going through all of this, if anyone knows someone who this might be a good fit for, or a client who's asked you about it, there's very easy calculators that you can run the age and the address specifically to figure out what you're able to pull out of that home. And the home does not need to be owned free and clear either. They could literally pay off the current balance of the mortgage and then pull money on top of that. The equity that they pull and this monthly money they're receiving, it's also a misconception that it has to be used for a new roof or paying medical bills, things like that. It could go to anything you want. You could light the money on fire in your front yard. It doesn't matter. It is literally your money that you're pulling out from your home to use for your monthly expenses. So even if someone isn't in dire straits and they just want to be able to afford to go to Florida for the winter instead and rent a home there, they could do something like this for the extra money to be able to do that. Recently I heard a story of someone who did a reverse mortgage for extra money from their home to offset to the cost of private tuition for their grandkids. Does not matter what you use it for, the money is yours to use. It only can be used on primary residences. So, a lot of older people want a vacation in Florida, or, want two homes, one in Minnesota next to family and one in Florida or California and Palm Springs where it's warm. They could purchase that as their primary home and use it as a reverse mortgage that way versus, depleting all of their assets, and having to pay cash or something like that along the way. Also, of course, when you're retired, you have no income. And so if you don't know this, when someone who's retired purchases a home, it is very difficult for them to qualify. Oftentimes they're only taking $1,000, $1,200 a month from an IRA or a pension account. And so, well, that's not going to get you qualified for anything. These people get turned away and then they end up paying cash for a house. This would allow you to purchase with it because there is no income qualifications. We're only looking at the value of the home, the amount of money you can put against it, and what your age and then their calculation on life expectancy would be. The homeowner does still pay property taxes and homeowners insurance. They just pay it separately outside of this mortgage. And because you're not making a monthly payment, so you can't include your taxes and your insurance in that payment, you're just paying it separately. And guys, at any point in time, this is all a lot of information and kind of technical. Please hop in and interrupt at any point with questions. So here's, just to kind of put it to light, here's a real client scenario. So we've got a 70-year-old grandmother whose spouse recently passed away. So she was living off of his pension and her pension. So now he's passed away, so she no longer receives that pension. Her income has now dropped to one person. She couldn't work because she's at home babysitting grandkids. Maybe she doesn't want to work, whatever the case might be. Some people aren't physically capable of doing the work they did when they were younger. She wanted to stay in the home that they've been in for the last 30 years, has a ton of equity, but they just don't have extra cash in hand for her to keep affording the monthly payments and the taxes and the insurance and the repairs on the home. So option for her, she gets a reverse mortgage. The current balance of her mortgage is paid off. She stays in the home. Because she has enough equity in the home, she's actually able to receive money every single month. And she's even able to make some repairs. Let's say the house needs a new roof, things like that. That all can be wrapped up into the reverse mortgage all at one time. And it doesn't have to be from her monthly distribution from the home equity. It could also go towards, when you close on the reverse mortgage, you can pay off your current mortgage. You could take a chunk of money to put a new roof on the house, do new siding, to finish a basement, to, get it up to code, whatever you have to do. And you could receive money from the home every single month. Back in 08, 09, reverse mortgages got a terrible rap. And then with the Fed fund rate being nearly zero, we literally haven't heard about them since then. Recently, we're starting to hear about them again, but we're also getting, people are calling them creative new names just because a reverse mortgage got such a bad rap at one point. Few things that if you went to the average person and you said, oh, maybe you should consider a reverse mortgage, that they would bring up to you as a concern that I want to talk through today. Loss of ownership. So it's a really common belief that if someone has a reverse mortgage and they are in there for a long time and then live longer than expected or whatever the case might be, that the bank can come and take your home. That is not the case. No one is going to show up on these people's front door and take their home. They remain the owners until they decide to sell the house or until they pass away and the heirs of the home decide to sell the house. Where this gets misconstrued is in 08 and 09, when values plummeted and people were in their homes, if they owed more on the home than the home was worth, then the bank takes that home back, only if the person has passed away, because there's no equity left in that home for their heirs to sell. That brings me to my next point. Well, what happens if you have a reverse mortgage on this house, home values go down in 10 years, and there is no equity? Who's responsible for that debt? Is it me now, if it was my mom's reverse mortgage, or how does that work? The answer is no. If you are an heir to a parent or something like that, that is not going to become your responsibility. These mortgages are all insured by FHA. And so FHA mortgage insurance then actually steps in, and they are the ones that cover that difference in debt. So kind of like life insurance, they're kind of betting on that not happening. They're betting on making money from the sale of this property, or for them never to being involved and just being able to collect the mortgage insurance that is initially put on the loan. If it doesn't happen that way, it's their fault, and it's no one else's liability that gets brought on. Again, there is this big misconception about being evicted. No different than any other type of loan. No one's going to show up to your home and say you're getting kicked out unless you stop paying all your bills. If all of a sudden you stopped paying your property taxes or insurance, then yes, some of the city could say, hey, you haven't paid your property taxes in 5 years. This isn't working. We now have a lien against your property. We need to get this figured out. But there is no other repercussions on this. Someone can't just call your mortgage due one day because you lived longer than you thought you were going to. Another thing, if you don't know how Medicaid and Social Security works, if you have income, it can affect how much you can pull from these resources. A HECM or a reverse mortgage is not considered taxable income. It is your own money, essentially. So that will not affect your Medicaid or your Social Security benefits. For some people who are getting Medicare, it is important to make sure this is all being filed correctly, so that when if you do have to claim some of this on taxes, it's not affecting any of that. Those are all easy things your advisor can talk about with you, though, and kind of depends on each individual scenario. The other misconception is that a reverse mortgage has really, really high fees on it. Again, not the case. A reverse mortgage has totally normal fees on it. It is not free to borrow the money, of course not, but it is no different than taking out a regular mortgage. It just has mortgage insurance on the loan, no different than any normal FHA loan. That being said, that amount of money is not something a client is going to pay out of pocket. That amount of money is just tacked on to their loan amount and doesn't affect the client whatsoever. Interest rate fluctuations. As we've all seen, interest rates are kind of all over the board right now, which is not very fun for anyone in our industry or who's thinking about purchasing right now. With this, there are different types of interest rate options. If you want to do an adjustable rate mortgage as the reverse mortgage, if you want it to be a fixed interest rate, and it all is going to depend on where the market's at that point. This is very different than how a HELOC is set up, where a HELOC is typically always going to be fluctuating. That is not what this is. There is an option to have a fixed rate mortgage, so you know exactly what you can count on and exactly how much money you'd potentially receive each month. Next misconception is leaving the home to the lender. A lot of people think, well, if my parents take out a reverse mortgage, then the bank just keeps the home when it's all said and done. That's not the case. If there is equity in the home, it still goes to the heirs of that home, and then they have an option to sell it. When they sell it, no different than a regular mortgage, the reverse mortgage that was however much was pulled from it would get paid off first, and then the rest of the money would go to the clients, the heirs, whatever the case is. So again, they would go to sell the home just like normal. The reverse mortgage would get paid off first, and then the rest of the money, whatever proceeds are left, would go to the heir. The other thing is kind of like an FHA loan in general. Reverse mortgages have gotten this misconception that it's for honestly, essentially like poor people. Like only the scrappiest, poorest person would possibly need a reverse mortgage. That's not really the case anymore. Right now, we're seeing more and more people who don't want to put their parents in assisted living. Their parents don't want to go to assisted living, and owning a home is a wealth privilege in our country. So if you have a ton of equity in your home, that a reverse mortgage is for you. It is not for someone who's over leveraged and just needs any dollar they can get. That's not what this is for. This is for someone who's just sitting on a lot of equity in their home, no matter if they have millions of dollars in the bank or if they have no dollars in the bank, it doesn't really matter. It's just a way to access your own funds that are sitting in your home. Again, on just this, essentially the idea that reverse mortgages are a scam. They was thought they're high in fees, they're gonna take your house. Reverse mortgages is predatory lending, they're just trying to scam old people. That is not the case. You do have to be really careful, just like with anything, that whoever you're working with is doing their due diligence and setting this up correctly and making sure to watch for all the caveats for you. If someone did not set up your reverse mortgage correctly and there was two people who were married and they excluded one of the married spouses and didn't consider their age or their income limits and document it correctly, that could wreak havoc for the person who passes away if there's a spouse left behind. So it is really incredibly important that you're working with someone in this loan process who understands the ins and outs, who's doing their due diligence, asking all the questions, and really using this loan to strategize it correctly for you, or it can create issues. Not really for heirs or anyone else, mostly just if you had a spouse and it wasn't set up correctly, it could create issues for them. And then limited use of funds. There also seems to be this giant misconception that the only thing you can take out a reverse mortgage for is if you need a new roof, if you need new siding, things like that. Again, not the case. Like I said, you could use the money to pay for a rental property in Florida every winter. You could use the money for private school tuition. Whatever floats your boat is what the money is there for. Okay, so what's the difference between this and a traditional mortgage? A traditional mortgage is going to require down payment and you're making a monthly payment. So I explained this to someone the other day and they're like, okay, I don't get it. Why wouldn't someone just take out a HELOC and get the money? They wouldn't take out a HELOC because one, they might not qualify for a HELOC. If they don't have income, there is no way to qualify them to borrow money in that way. Well, what if they had a cosign or something like that? Well, that's great too, but they still have to make a payment on it. If they're already struggling with their income and they need another $1,500 a month and they get a loan that's going to provide them that, but then the loan costs them $500 a month, well, now they're only getting $1,000 a month. And so that's where a HELOC is not the right solution for some of these folks because they need a set amount of money. For an example of what it would look like today, I ran a scenario before we hopped on this call. If someone had a $400,000 house that didn't have a current mortgage on it, there's two ways you can set it up. You can set it up where you receive monthly income for the rest of your life expectancy, or you can set it up where you receive monthly income for 10 years. Why would you do the different options? Depending on how much money you need a month, and then obviously depending on how old you are, how long you anticipate living. So at a 400K home, if you did the lifetime option, that would get you $1,474 a month right now. So $1,474 a month right now. And this is tax-free money just hitting your bank account every single month from just the home that you live in. If you did it over 10 years, so the shortened period of time, then you would get $2,587 a month right now. I think of my grandparents, who we've had to do some creative options like this for. $2,500 a month would get my grandma pretty far. I mean, she does very minimal things. She goes to a supper club on Friday nights for fish fry. She drives to Florida twice a year to I don't really know what. There's options, right? Like this would get them very, very far, especially because a lot of times all of their other expenses are pretty low. That would be enough for her to have a lot of extra money for spending money for whatever she wanted. So that instead of penny pinching for the last years of her life, she'd actually be able to go and enjoy it and feel comfortable in the life she's living. I think, we think of elderly people and we don't really, I don't oftentimes think of them having money issues until you really start to consider, oh gosh, they're living off of $500 of disposable income a month and that's it. That is hard when it's Christmas time. If you need new tires on your car, if inflation numbers have gone up. So that's really the type of person that would want to utilize something like this. Again, you can do two different ways. You can use a reverse, and for anyone that's confused when they're looking at this, a HECM is a type of reverse mortgage. It is the type of reverse mortgage that we would recommend someone utilizing. So,
Allison, I have a quick question.
yeah.
Okay, so back on your last slide, when you just did the example of the 400K, that was paid off and they would get the 1,000 for 400 or whatever. But
yeah.
so say they did not have it fully paid off, that would just be like a little bit lower then, correct? Like, because then it would be towards the mortgage or the remaining balance, and then you'd get kind of paid out.
Yep, so they would pay off the remaining balance and then the next allotment, no different than you calculate your principal and interest payments, but the principal interest payment of whatever it is going to you. So I ran another scenario earlier on, and there is also a calculation that goes in per the address. So they want to see what they think this home is going to continue to value at over the years, because their goal is not for you to be underwater in this house. The bank really doesn't want your house back, right? And so they'll take, okay, this house is realistically 500,000. Usually it's about 50% of that. And then they'll say, that's the amount of money you can pull depending on your age. And then if there's anything needs to be paid off, that goes in that. So if you have a $500,000 house and we parse it down to 250, let's say there's $100,000 loan balance, then there'd be about 150,000 that they can pull from over the next period of time.
That makes sense. Okay, thank you.
Yeah. And then the difference is on your age, maybe you want to do it over the rest of your lifetime and do the smaller portion. Maybe you need more money up front and the life expectancy is shorter. Maybe you need, health, medical bills, whatever, and then you want to do it over the 10-year. It doesn't make a true difference. It's not, one isn't better than the other. It just totally depends on the individual situation.
Perfect. Thank you for clarifying.
Yeah. And then just reiterating, you can do a purchase transaction or you can do a refinance transaction. It is more likely that we see the refinance scenario, but it does still happen on a purchase where someone has quite a bit of cash. Maybe a financial advisor is going, hey guys, yes, you can pay for this place in cash, but I don't really want you to deplete all of your assets on this. I would rather us, maybe we pay cash for it. And then instead of pulling from your IRA for monthly payments, you're actually going to pull it from, your house. And so that's an option. And that's what that would look like as well. Again, we see that more with someone's purchasing a home in Florida or out of state. And it's a timing thing and where it makes sense to pull money from and not. In any of these scenarios, we would never want someone to proceed with this without consulting their advisor and making sure that this makes the most amount of sense with them, because there's a lot of intricacies to it. And it usually comes down to where the tax burden is, what other money they have, what type of accounts it is, and whether it makes sense to pull this, and what their long-term financial goals are. If their long-term financial goals are to, if their major goal right now is to pay for their grandkids' private school tuition, this is a great option. Let's go to Florida. This is a great option. If that's not it, and they just want to have this property paid off free and clear, and they should be burning through these other retirement accounts that can't get passed on or would be heavily taxed, then that's a different conversation. And that's where it's so important that an advisor steps in to help strategize. The other misconception, lastly, my last thing on this, it's funny because all there is to know about reverse mortgages is all the things that aren't true about them. When you start going on the internet and searching reverse mortgages, it's most things are like, it's a scam, it's this, it's that, it's awful, it's predatory lending. It's a last resort for people who have no family to help them or who have no money. It's just not the case. A reverse mortgage is meant for someone who's sitting on a lot of equity. If you're sitting on a lot of equity, that's not a last resort. That's why we encourage people to invest in real estate, is because we know it's a great long-term hold and you can always access it. Think of a reverse mortgage very similar to a life insurance policy. People buy life insurance policies and pay into them so that when they pull from them, it's tax-free income. A reverse mortgage does exactly that. It is tax-free income that you've been paying into with your hard-earned taxed dollars for years and years and years. So if someone is using it correctly, it is an incredible strategy to help continue to build wealth. For example, if someone owns a property, let's say we have no guarantee of where home prices are going to be. My husband and I own rental properties. Yes, the goal is to have these paid off and hopefully our kids can inherit them and own this property, and then they can have the residual income from the property for years and years to come. Watch, when we die, they'll probably sell them all the next day and get overtaxed on them. Who knows? But that's our intention, right? So you go through that. Well, we don't know what those properties are going to be worth. What I do know is the money in our 401ks and IRAs and our actual assets, maybe those assets are better for our kids to inherit and not have us pull from those assets. And instead we pull against a property that we're living in and take disbursements from that. Maybe our kids don't want to be left with a house to sell. Maybe they have no interest in that and we'd be better off handing them a chunk of money. For example, if people's big concern about not doing a reverse mortgage is that the value is going to come down, the more money will be owed on the property than what it's worth, and the bank takes the property. Well, let me ask, if you are someone's heir, do you really want to inherit a property that has no equity left in it anyways? Probably not. You don't want to go through the headache of hiring a realtor, selling a property, and doing all of this only to net $10,000 of inheritance when it's all said and done, in which then you'll still have to pay taxes on. Again, and if the property is diminishing and we have no guaranteed value on this, but we have a guaranteed value on an IRA or a 401k account that's existing and is a set amount of money, then maybe depending on where the market's going, it's better for us to leave that as an inheritance. So again, it is definitely not a last resort. It is not intended to be predatory lending whatsoever. It is really meant to be an alternative resource for a strategic solution for someone who really is educated on maximizing their money and strategizing the wealth they've built over their lifetime. Now that I've just pummeled you guys with information and a lot of data, what questions does anyone have? Anything? Samantha, was that helpful? Is that what you thought it would be?
Yes, I totally did. And I just wanted to write it down because
Yes.
I think this is like amazing. And I had no idea this was a thing, but I do have like a lot of people that are in my sort of sphere or my farm area that I think that this might be beneficial for. So I wanted to make sure I had really good notes.
Literally last night, a gal messaged, hold on, I want to look at what the video or what they were promoting. They're kind of calling the program like a funny name. Not a funny name, just a different name. But a girl literally messaged me yesterday and was like, is this real? And what was the video? It was a loan. They're calling it, instead of a reverse mortgage, they're calling it, hold on, I'm watching the video to see what they call it in here. They call it hold on, she's still rambling about it. When she gets to it in the video, I'll tell you, but someone just literally messaged me last night and was like, is this a real thing? Like, this is literally just a different strategic name for a reverse mortgage. And essentially family opportunity mortgage. That's what it is. And that's people just rebranding a reverse mortgage, because reverse mortgage got such a negative connotation in 08 and 09 just because people's home values went down. I also think, we live in a totally new generation where everyone has knowledge at their fingertips with Google. Even go back 20 years, if your parents all of a sudden had no equity in their home because they took out a reverse mortgage, and you always thought their finances were fine, and you don't quite understand what they got themselves into, but you're like, this doesn't make any sense. There's no equity in their house yet. We didn't have any ability to like Google and figure out the pros and the cons and make sure that it's set up correctly. People just did what someone told them to do. And it wasn't always in their best interest, or it wasn't always strategized correctly. And so some of these products, you're going to see them roll back out and kind of roll back out with new names and things like that, just because they got such a bad rap from people misusing them or working with someone who was putting someone in a solution that wasn't the best strategic option for them. So hopefully it is helpful. And the reason I think it's great for realtors to be listening to this conversation is right now, a lot of your past clients are scared. They're scared on what's happening in the market. They're scared what's happening with their retirement accounts. They don't know what comes next, right? And so they're also sitting on one of the largest assets that they likely have, especially if people's 401ks have just taken a hit, things like that. They're the most money they have is in their house likely. And so agents a lot of times struggle on, well, what do I call someone and say, and how do I be a resource if it's not time for them to sell or buy? Well, I should keep in touch, but what would I say to them? Well, having a conversation around this, how are your parents? What are this? Oh, did you know this was an option? I mean, this could be life-changing for some people, especially some of your clients' parents who maybe are footing the monthly bill for their household expenses right now. Having those conversations and being a resource and a true expert in the marketplace, I think, is totally what sets people apart. And a lot of us haven't had to do that before because the market's been easy and people haven't been scared. It's been a really, really good time to own real estate. Well, now things are shifting with inflationary numbers and everything else. People do need more creative solutions. So being the expert on all things real estate and being versed in things like this, I think, is really important. Any other questions I can answer for anybody? Well, thank you guys for hopping on. We're gonna have a recording of this, so if you missed any details or anything like that, we can send you the recording as well. And please use this as a resource. Maybe this isn't the right loan solution for someone maybe they're just struggling with just a different problem. We are always happy to connect with people, and maybe we're not the best fit, but we can find them someone who is the best fit. Maybe really what they need is a HELOC or a line of credit. We have a lot of banking connections as well that we'd be happy to help steer them the right direction. But we have a wealth of knowledge of all of the different options that live out there in the world and can help kind of play matchmaker with what might be best for them, and maybe can help them with a purchase or a refinance down the road if we're not the right fit now. Again, guys, thank you for hopping on. This was fun to have everyone on here and to be able to connect. Any questions, reverse mortgage related or not, I'm always here to be a resource. Thanks, guys.
Thank you, Allison.
Thanks, Allison.